What is going on, traders? In today's video, we're going to talk about 3 tips how to identify key levels in trading ranges. Normally on Wednesdays, I record my live trading session, but today was FOMC announcement day, and this is very typical before the news. Market is extremely slow, volume is slow, so I didn't take any setups. I was just sitting on my hands, patiently waiting, and after 6 hours, I just couldn't force myself to record on camera. I didn't even know I was about to take trades. I managed to take this one trade right here and the last trade right here, which was impulsive trade, and I should have stayed away from this late in the day, but I managed to took these trades. But overall, these are the trades for the day. Most of them are hindsight, as I said, because I wasn't really taking these trades as the latest times, and really the market was overall very sideways. So let's talk about the trading range tips. All right, so when it comes to trading ranges, we need to understand that we want to buy low and sell high, and we want to fade the breakouts, because most breakouts of trading ranges will fail. So you want to be always fading the breakouts, meaning trading them in the opposite direction. Now the tip number 1 is going to be how do we identify the proper support and proper resistance. Now I'm just going to straight off the bat say that we don't use the stims. If you guys take a look, this is the stim, this is the stim. We don't use stims for identification of the key levels of trading ranges. We use bodies, we use closes. All right. And now the tip number 1, we don't necessarily always want to use the highest high or the lowest low. Okay, and this is the pre-market analysis. Ignore what you see on the right side, because we try to locate the key levels before we start trading. We're doing our pre-market analysis, and I'm going to list all of these 3 tips now, and I'm going to show you more examples later, so it will make more sense. So when I see the highest point and the lowest point, a lot of times you can deprive yourself of few good setups. So what I like to do, I like to just sacrifice few points in order for me to have a little bit more confirmation. So take a look, I just drag a little bit higher and I have more confirmation with the price action right here. I just drag a little bit lower right here and I get confirmation right here and I get confirmation right here. So this makes sense. With more experience, you will start to make sense, and this is a skill like anything else. Drawing trend lines and identifying support and resistance, it gets easier with time and with experience. So this is what I've noticed. This is just my experience, how I usually do it. If you completely use the highest or lowest point, you can get no bounces off the key levels. Okay. And the tip number 2 is how to draw the trend lines, because in trading ranges, and trading range is a mostly sideways movement when you're swinging up and down through EMA, your best bet and your safest bet is going to be using the shortened trend lines and really the tight ones, because they are the least subjective and the most objectives of them all. They can only help you. And why they can only help you? Because after you have a break in a new extreme, you're no longer looking for multiple new extremes, because that's really the first line defense. Your shortened trend line is your best bet in trading ranges. They will generate the most results. Now you can use slightly wider patterns. There's nothing wrong with that. What I want to say with this tip number 2, you don't really want to use for completely wide or flat patterns, because I've noticed and a lot of traders are doing this, and there's nothing wrong with this, because I did the same thing, and we all have the same tendency where when we are starting trading, until we market proves us otherwise. Some traders are looking at trend line something like this, and take a look. It fits off the highs, it fits nicely off the lows. So see how many bounces you have, but this is too flat, this is too wide. You don't want to use this. This is a trading range structure. This is completely sideways movement. Same thing right here. You have a spike and the channel pattern, and it may look valid like this. There's nothing wrong with this, but some traders, they have the tendency to make it wider like this. Okay, and this is not, there's so much gap here, or even, God forbid, they can make it wider like this, and this is extremely flat now. There's a gap here, there's a gap here. It doesn't really fit price nicely. It's swinging up and down, up and down. This is more of a trading range like looking structure, and this is not what you want to use in trading ranges. Okay, let's talk about today, because today was a perfect example. You guys can see this is a clearly consolidating structure. Take a look, we're going sideways for the entirety of a day. EMA is completely flat. Bar, look at this, down, up, down, up, down, up, down, up, down, up, so forth. So this is a clearly a trading range structure. So remember, the first trend line, the oldest one, the first one you would see when you would first look at the chart, is most likely the one that is the most valid. You don't want to be making it wider like this, wider like this, or potentially wider like this, because take a look, you get multiple touches right here. You can even make a case for it and it bounced. Okay, so I'm not saying that the wider patterns are completely wrong, because no, there are of course a little wider patterns even in trading ranges, but be aware of making it flatter and flatter and flatter, because the danger is you can see a break and a new extreme, and you can be tempted to still be looking for new low and new low, or new high and new high, and you'll be already getting trapped because you're on the wrong side of the market, because the tighter trend line already played out. So that's just a tip I've noticed throughout the experience, how you want to focus on the trading ranges, that your short-term ones completed the best bet, and yeah, draw the we already talked about how to find the support and resistance. This was the pre-market open. I don't want to use stims like this. I want to use closes, and I have nice confirmation, and I have a nice confirmation right here. Market eventually broke a little bit lower. And yeah, let's talk about tip number 3. So tip number 3 is, and this is the least common you will get familiar with, because this really doesn't happen too often, but a lot of times you can have the tendency, as the trading range gets smaller and smaller, you may want to draw this resistance a little bit lower, or the support a little bit higher like this, to make it fit. And this is not really safe, because a lot of times you can get a few breakouts and you would be tempted to fade them, but they're going to work, because what you want to do, you still want to keep this where you would initially have it, because these are your major key levels, major key entry points, and you kind of want it to make sense. You kind of want it to, you know, be around the trading range in the right proportion. You don't want to draw it too low, or resistance support too high, because you can get, you know, few fake outs, and you can see this is the safest one. So be a little bit leery of that. Of course, you can have a small trading range inside of the trading range. So what you're going to do, you're going to draw additional support or resistance, so you can play safely at this one, but you're going to keep your main ones intact, because you don't want to keep your main ones something like this or something like this. This is really not what you want to do. You're already overshooting it, shooting way too much. And this, all right, here we have another trading range example. You guys can see here's the lowest low, here's the stims. I'm not going to use the stims, I'm going to use closes, but this is way too low, and I can, you know, draw it a little bit higher, just, you know, a few more points to get the confirmation off of here. It still confirms here, and it works nicely. So this is the main key entry point, key level. I can keep the support at the highest high, because this is still the pre-market analysis, because I have triple top, I have multiple confirmation. If I want to draw it a little bit lower, I would draw it way too here, and this is obviously not making sense. So I can use it at the highest high here, because I have a confirmation, and I don't want to use it a little bit necessarily right here, even though this is so few points, not really that big of a deal, but from experience, you will notice it is much better to have an additional experience, additional confirmation. Once again, you want to use shorter term trend lines. They're your best bet. You don't want to be looking for something like this, because why? Up, down, up, down, up, down, up, down. This is a trading looking structure. You're going really wide, and you don't want to be using these larger patterns, because this is just trading range structure. This is too flat. Okay, every single time when it's starting to get too flat, you have to be a little bit more careful. Okay, it can work in some cases, but we're trying to get odds on our favor, and we want to stick with the short term ones. They are your best bet. Once again, if I draw a little bit higher like here, this is the tip number 3. You have a few breakouts. Even though it worked for scalps, those breakouts eventually kept broken lower. But if you keep it at the lows right here, you guys can see this is the major key level, this is the major failed breakout, and price eventually broke higher, because failed breakouts like here and like here, then generate a lot of times strong momentum to get in completely other side of the range. Once again, trading range right here, I can use the lows right here, but that's not really, it doesn't really is too useful, because that's too low. I can just draw it a little bit higher to get more confirmation. I don't want to use the highest high here, because take a look how few confirmations I get here. So I just want to drag it a little bit lower, or in this instance I actually don't want to drag, because this feels kind of too low, although this is not too bad either. I can get the confirmation right here. Yeah, this actually makes sense. If I just draw it way too low, this is already way too low for my liking, so this could be good enough to confirm it here. This was the failed breakout. Once again, sticking with the mainly shorter term trend lines. I don't want to use wider trend lines like this, even though I mean, you can make a case for it. It can be useful, but most often than not, you don't want to be looking for wider patterns. You mostly want to be looking for the shorter ones. Okay, so let me see if there is no. Okay, you don't want to be doing the wider and wider because that's already way too flat, and your best bet is to be sticking with the shorter ones. They're always the safest ones in trading ranges. Okay, here's the lowest low, but I don't want to use it because there's such a gap, so I want to get a little bit more confirmation. And when it comes to resistance, I can use the highest high here. And why can I use the highest high here? Because there is no prior point of reference for confirmation. Okay, because I would have to draw it all the way down here to get the confirmation. This is already the tip number 3 that you want to stay away from. So you can use the highest high or the lowest low if there is no, close points for confirmation. Okay, and once again, you don't want to draw it way too high up like this or way too low like this, because here you would have a breakout, and this is not really a failed breakout yet because the proper key entry point is down here. All right, here we have another example. What I could do, I could use the stims, but I'm not going to use that. Stims are no good. I can use the lowest low. I'm just going to drag it a little bit higher so I get a little bit more confirmation. I'm going to use the highest high because if I found a more confirmation, I'm already way too low, so that's not what I want to do. I want to use it a little bit higher like this, and once again I'm going to stick with the shortened trend lines, something like this. And what I don't want to be doing, I don't want to be doing this or this or this. This is just too flat, just too wide, and overall structure is really going sideways. EMA is flat, we're going up and down, up and down. And if you guys take a look here, yeah, and you don't want to draw it a little bit lower like this because you're already making it way too tight, and this is not really what you want to do. You want to keep your key level static where it makes sense, and this is how you should do it, and this is how I've been doing it for most of my career now. All right, and here's the last example. Let's take a look at the pre-market structure analysis. In this instance, I can use the lowest lows. Why? Because I have a double bottom confirmation, so I can confirm it, and it makes sense. This is a common sense. It looks like a valid trading range. It really contains the price nicely, and I'm not going to use the highest high right here, even though it's not bad. I'm definitely not going to use stims, but if I just drag it a little bit lower, I get more confirmation right here, more confirmation right here. This is really making the price nicer. I'm going to use the shorter term trend lines. They're the much safer ones, and I'm not going to be looking for really flat patterns, even though there is probably this one could be helpful. You guys can see you have multiple higher highs, higher lows working higher, but you can see this is a bullish imbalance, and once you're starting to be getting close to this resistance, do you really want to be trading this? I would say it is much better to wait for price to actually break higher for uptrend to start, and from that point on, it is much better to be looking for second entry longs with the trend. Second entry long here, second entry long here, second entry long here, second entry long here. So just something to think about. You can use a little bit wider patterns, but when you're looking for two flat patterns, they're not really too useful because you can follow the shortened trend lines and you can still get to the same place much safer. Okay, and with experience, you will get the feel how to do it properly. All right, so I'm gonna wrap it up and talk to you next time. Take care, buddy.